Hey guys, before we get into today's episode, I wanted to let you guys know that we have a free 1-week workshop coming up November 14th. Details aren't up quite yet, but visit www.tier1trading.com. Also follow us on social media and you'll hear all about how you can register and attend. A great man and a well-respected individual in our space once told me that creativity is the key to success. Actually, I had a few people tell me this before, and for the longest time, I didn't really understand what that meant. In today's episode of the Trading Coach Podcast, we're going to dig into that concept, and hopefully, by the end, you'll know exactly what I'm referring to. As a way to, looks like risk reward still wouldn't have worked, but it's a creative idea. And that's trading, believe it or not, it is about being creative, right? You have to have a creative mind. It's funny, you ask all of I never thought of this until I started talking to Dr. Brett Steenbarger about creativity. Because usually you think the exact opposite, right? When we first go into trading, we typically think we have to do exactly what everyone else is doing, right? Would you guys agree with that? When we first get into trading, is your mindset kind of, hey, I'm going to follow someone that has done it, and I'm just going to do it the exact same way? Right, we had this conversation. I talked about a little bit on Monday about a trader who was reading One Good Trade by Mike Bellafiore and said, hey, Mike talks about his traders having a 1-to-5 risk reward with a 60% win percentage. And, I got to find a strategy like that. And I'm like, no, you don't. Like, that's great. Don't get me wrong. But wouldn't it be good to have a 60% win percentage with a 1-to-4? Like, is that allowable? 1-to-3 or a 1-to-5 with a 50% win? Like, yeah, like, what we have to do as traders is we have to be creative, right? And it doesn't matter if you are a price action trader who is reading a price chart, or if you're a systems trader developing indicators. You have to be creative. And I say this all the time for you indicator people, right? The default settings of your indicator, is that typically the best settings to use? When you load up an RSI or stochastics or a MACD or an ADX, should you just go with the default? No, it's typically not. It's typically not. But we have the exact opposite mindset, right? And I say we, maybe it's just me, but in my experience, I think a lot of traders are like this. We're all very similar. When we first load up an indicator, we assume the default is the best because it's the default. Right? Why wouldn't it be the best? It is whoever programmed this indicator decided that this is going to be the default because this is the optimal way to use it. Isn't that what we assume? Someone did all the work for us. Someone did all the work for us and found the optimal setting for this indicator and programmed it for us so we don't have to do the work. False. You have to be creative. You have to play around with the settings. You have to play around with the usage of the indicator. Again, most indicators, people are probably using them the wrong way. Or they're not experimenting with alternate ways to use them. But you have to be creative. You have to have the ability to look at your chart and be like, what if I tweaked it? It looks a little slow there. What if I sped it up a little bit? How would that affect this? Look at that. Well, what if instead of using the RSI for, we talk about this one a lot. What if instead of using the RSI to sell every time it goes overbought, every time it crosses that line at the top, and buy every time it crosses that line at the bottom, right? The reversal strategy index. That's what I used to think it was called. I used to think it was called the reversal strategy because you just, you buy when it gets above 70 or you sell when it gets above 70, you buy when it gets below 30, right? What if instead of that, what if I turned the RSI into a breakout strategy? What do you mean? Well, what if every time that RSI broke 70, I buy? What if every time it broke 30, I sold? Right? Because if this indicator measures strength, and the higher it goes, the more strength the market has, wouldn't that be a positive? So, right, you got to be creative with these things. And same thing with price action, right? Putting together, combinations like, hey, inside bars. Well, am I just going to trade every inside bar break? Well, no. right? You probably don't want to trade every inside bar break, but maybe you have a bias. Maybe the placement of the inside bar, right? Is it in the upper third of the mother candle? Is it in the bottom half of the mother candle? Is it at structure? Or is he experimenting with the fakie? Like, hey, I wait for an inside bar break at structure, but then once it fakes it out and goes the other way, that's when I enter, right? That's being creative. That's being creative. You're taking the same concept and you're using it in a different way. And as traders, we want to be different. And do you know why we want to be different? Because 90+% of traders fail. So just by those numbers alone, we don't want to be like everyone else. So if we are different, that is typically a positive thing. That's why if you ever, we spoke to this guy during one of the live streams the other day who was talking about, he felt nervous because he was sharing ideas, I think on the internet or on the forum, and people were like bashing his ideas and he'd feel bad and lose confidence. That's why, like, if I share an idea, and every once in a while I share an idea on TradingView, right? Or according to that guy a few weeks ago, I share every idea on TradingView, right? If I share an idea on TradingView and someone comes down and bashes it, I get a nice little smile on my face. Nice little Joker smile on my face saying, yes, I'm on the right side of the market because 3 people just said they're looking the other way. Perfect. I double down on my position though. each negative comment, I add a little bit more position size. I go through comments at the end of the night and okay, add another lot. Yes. Keep them coming. Seriously, don't do that. No, that's a very reckless way of money management. We talked about money management being 80% of the battle. Do not do that. But seriously, yeah. So you got to be creative. Same thing. Yeah. Orsi just mentioned. George said he was thinking about another example from Monday's Q&A using multiple indicators for targets, having an EMA cross and the parabolic SAR dot swap could be a good sign to take targets off. So here's the thing, right? The parabolic SAR is a perfect example. If you guys are not familiar with the parabolic SAR, it's like it's a trailing indicator, little dots or dashes that trails price action. Like when it's kind of like a moving average, when it's below, you should be like buying. When it switches and on top, selling, right? The parabolic SAR is typically looked at as it's not typically looked at as a trail, right? You can use it as a trail. You can use it as an entry, right? You can be very creative with how you use it, right? That could be an entry signal instead of just a trail, right? It could be a trail instead of just an entry signal, right? Many different ways you can use it. Bobby says, great Q&A, by the way, caught the recording last night. Yeah. If you guys get a chance, it was a good one. It was we spoke about, we kind of combined, it was Jason's question. There's too many Jasons here. Jason's question about kind of risk management and money management. And we talked about taking targets at multiple positions, but not in your typical like, hey, target 1 here, target 2 there, but rather, different methods. So for an example, maybe having a set target, like I always believe in having a set target unless you're trading like an indice or something that the trend is your friend and you're trying to trail forever, right? I don't, Forex market, I don't really recommend that. But having kind of like an ultimate target, meaning like best case scenario, here's where I expect price to go, having an ultimate hard target, but also having an active profit reducer as well, or profit taker, meaning that if an indicator does this, then I take a partial off. Or if I get this type of candlestick formation, then I take a partial off. And that way you're kind of getting the best of both worlds. Now there's always a sacrifice to it, don't get me wrong, but you're kind of getting the best of both worlds because ideally you're taking profit off at the first sign of danger. So you're never in a situation where unless the trade goes right against you or never gives you that signal, you're not in a situation where price goes like 3/4 of the way to your profit and it stops you out for break even or for a loss. So you take something off. Worst case scenario, you make a little bit of money, hopefully, but then you still have a little bit left on just in case you do get that big move. And it's something I never thought about in my trading as far as I do multiple target taking, obviously, but I never thought about it as far as using active trail management as an active profit taker as well and combining it that way. Just because I don't personally use any active trade management that way. As far as like profit taking, I have my target levels, and I trail, and I wait till either price hits my target or I get trailed out on stops. But I have experimented with it a lot during strategy development, where I'm using stuff like a stochastics cross to exit a trade, or I never use a specific candlestick formation, but like a parabolic SAR, for example, or you can use a moving average cross. We had a bunch of examples, but yeah, if you get a chance to watch it, go ahead. It's from this past Monday, so September, what's that? 26th? Was that Monday? 2 days ago? 26th? Just Q&A archives. If you just search active trade management or active profit taking, it'll come up. Hope this episode inspired you to be creative, inspired you to think outside the box, and really follow your own path and not get sucked into what everyone else is telling you what to do. Speaking of which, that's exactly what we did when we started our company, Tier 1 Trading, right? We decided to break off from the norm and do something that no one else in the industry was doing. And we took risk. And the result of that risk was, well, Forbes magazine saying that we are one of the greatest innovators in trading education out there. And that's pretty cool. If you want to see why, head over to www.tier1trading.com. Check out what we have available on the site. I recommend the free workshops. I recommend the risk-free trial membership. And let me know what you think.